The reason, I invested $25 million personally in Forward Industries. And the reason I'm excited about this opportunity is that I think there's a lot we can do as a publicly traded company to earn more SOL per share than we could just earn by buying the underlying SOL. And we've talked about this in a number of places, and I'm happy to reiterate that today. The first and perhaps simplest is we can be very active in DeFi. What's really cool about Solana as compared to, let's say, Bitcoin, is that there's this thriving DeFi ecosystem of all these protocols. We are very fortunate to know more or less all of those founders. Given my role at Multicoin, we have seeded most of them and know these teams very well. And so we are currently negotiating deals with these teams where not only can we earn the native yield we would by depositing assets into their protocols, we're negotiating extra compensation above and beyond that for our shareholders. And we think this is a big win-win for both sides. It's good for shareholders, obviously, and it's good for those DeFi protocols because we're a publicly traded company. And that means that means those DeFi protocols will then be able to represent in the future that they have a publicly traded company, using their systems. So I think there's kind of value in all directions. So the first thing is negotiating these deals as a function of our scale, brand, and reputation. The second thing we're trying to do to increase the SOL per share for our shareholders is by arbitraging capital markets. And what do I mean by that? You can get a loan from a bank in the United States today for, call it 4 to 5%. Unclear if we're going to be able to tap into that. We're certainly trying, but maybe we end up paying 7 or 8 or 9%. We'll see where that nets out. But we are going to be taking loans in dollars and then using the proceeds of those loans not to lever up, but instead to deploy those dollars into Solana's DeFi ecosystem in dollar-denominated strategies. And I think we can earn upwards of 15% doing so. And that means we can deliver that arbitrage spread to our shareholders as profits. I'm very excited about being able to do that, leveraging the flexibility that comes from being a publicly traded company to make that happen. And then I think the third thing that we're really excited about is it looks like there's going to be probably 30, maybe 40 different digital asset treasury companies out there across Solana, Ethereum, Bitcoin, Avalanche, Sui, etc. And I think it's quite unlikely that 40 of these entities can sustain themselves in the long run. And so I think we have the absolute dream team here between Multicoin and Galaxy and Jump. We have the deep trading expertise and Solana expertise. We have investment banking expertise and balance sheet expertise and one of the largest counterparties in crypto. And we have Multicoin as one of the leading VCs. Combining those three entities together, I think puts us in the prime position. And with the already our current balance sheet, the optimal position to acquire other digital asset treasury companies, both Solana specific and non-Solana specific ones. And I think there's a massive, massive opportunity there for us to accrete SOL per share for our shareholders. So those are just a number of the things that we're aiming to do in the coming weeks and months.